Hi, my name is Ed Schmitz, and I'm a partner here at Hansman Weeble. We've been getting financial reporting questions related to PPP loans. This question is about partial loan forgiveness. How would an organization account for the PPP loan if they expect only a portion of the loan to be forgiven? As discussed in a separate video, business entities have 4 different ways available to them on how to account for the PPP loan: as debt, as a conditional grant under FASB 958, as a government grant under IAS 20, or as a gain contingency. Nonprofit organizations only have 2 ways to account for the PPP loan: as debt or as a conditional grant. Let's discuss partial loan forgiveness. Management must account for the PPP loan in its entirety using their accounting policy. Management may not split the PPP loan amount between methods. What if an organization doesn't have a policy to account for government grants as a conditional grant, a government grant under IAS 20, or as a gain contingency? Then they're going to have to create that accounting policy. Keep in mind that nonprofit organizations can only account for the PPP loan as either debt or a conditional grant. The other 2 alternatives are not available to them. Since most of our clients are expected to treat the PPP loan as either debt or as a conditional grant, we'll discuss these methods in more detail. If the accounting policy is to treat the PPP loan as debt, the loan proceeds will be recorded as a note payable on the balance sheet, and interest will be accrued like any other note payable. When a portion of the debt and accrued interest is legally forgiven by the bank, that portion is removed from the balance sheet and other income is recorded at that time. The remaining debt and accrued interest are reduced as payments are made to the bank over the term of the loan. The financial statement disclosures for the PPP loan will be included in the notes payable disclosures. If the accounting policy is to treat the PPP loan as a conditional grant under FASB 958, the loan proceeds will be recorded as a refundable advance liability on the balance sheet. The liability will be reduced and reclassified to grant income or other income when the qualifying expenses have been incurred. The amount left over will be the amount that must be repaid to the bank and will be reduced as payments are made over the term of the loan. This portion will still be shown as a refundable advance liability on the balance sheet until the amount is repaid to the bank. The financial statement disclosures for the PPP loan will be included in the refundable advance liability disclosure, not the notes payable disclosure. Describe the nature of the liability and any forgiveness and repayment terms. Thank you for watching this short video. If you need further assistance, our contact information is shown here.